Imagine this. You work hard, save diligently, and invest your money thinking you're building wealth. But a few years later, instead of a fortune, you're staring at losses, missed opportunities, and a portfolio that barely outpaces inflation. The truth? Most investors don't fail because they pick bad stocks. They fail because they make predictable, avoidable mistakes. And today, I'm going to expose the 5 biggest investing mistakes that silently drain your wealth and keep you stuck in financial mediocrity. Stick around, because number 5 is the one that even experienced investors fall for, and it could cost you hundreds of thousands of dollars over time. Why these mistakes ruin your wealth. Before we dive in, let's get one thing straight. Investing isn't just about making money. It's about securing your future, building freedom, and creating a life where money works for you instead of the other way around. But the harsh reality? Many people sabotage themselves without even realizing it. Let's make sure you're not one of them. The 5 biggest investing mistakes. Mistake number 1, trying to time the market. Every new investor thinks they can outsmart the market. Buy low, sell high, cash in big. But here's the reality. Even professional hedge fund managers get this wrong more often than not. The stock market moves unpredictably in the short term, and if you try to time it, you're more likely to miss the biggest gains. A study found that missing just the 10 best days in the market over 20 years can cut your returns in half. Imagine working for decades only to leave millions on the table because of impatience. Instead, the best investors stay consistent. They invest through highs and lows because time in the market beats timing the market. And speaking of time, mistake number 2, ignoring the power of long-term investing. 2 people invest $10,000. One starts at 20, the other at 30. The 20-year-old contributes for just 10 years and stops. The 30-year-old invests for 35 years straight. Who ends up richer at retirement? Surprisingly, it's the first person, because compound interest works like magic over time. Yet, too many young investors hesitate, thinking they need big money to start. The truth? Even $100 invested today is worth more than $1,000 invested years later. Speaking of bad habits, mistake number 3, investing without a strategy. Imagine playing chess but moving pieces randomly, hoping to win. That's what many investors do. They jump into stocks, crypto, or real estate based on social media hype, not strategy. Good investing requires a plan. Are you investing for long-term growth, passive income, financial independence? Your strategy determines your asset allocation, risk tolerance, and exit plans. Without one, you're gambling, not investing. And gambling brings us to the next deadly mistake. Mistake number 4, taking on too much risk or not enough. Too much risk? You could lose everything. Too little? You'll barely keep up with inflation. And here's where most investors get it wrong. Think about 2008. People went all in on real estate, leveraging everything, and got wiped out when the crash hit. Fast forward to today, and many young investors are terrified of risk, keeping all their money in cash, losing out to inflation. The key? Smart risk, diversification, index funds. Understanding that calculated risk, not reckless risk, is what builds wealth. But even the smartest investors make one last fatal mistake. Mistake number 5, letting emotions control your investments. Ever panic sold during a market crash? Or FOMO bought a stock at its peak? Congratulations, you've been played by your own psychology. Markets rise and fall, but wealth is built by those who stay disciplined. The biggest money is made by those who buy when others are scared and hold when others are greedy. Here's a little secret. If you can master your emotions, you'll instantly be a better investor than 90% of people. So let's recap. Don't try to time the market. Start investing early and let compounding do its magic. Have a clear strategy. Take smart, calculated risks. Control your emotions and stay disciplined. If you can avoid these 5 mistakes, you're already ahead of most investors and on your way to financial freedom. Now, if you're wondering how to harness the power of compounding to build massive wealth, don't stop here. I've got another video waiting for you that breaks down exactly how compounding turns small investments into millions. Click on the screen and I'll see you there.